Yes, guys, so welcome to the next video. So in this one, we're just going to be covering fundamental divergences. So it's going to be quite a brief one. I haven't got anything planned to actually show you guys because it's just going to be something that I'll be explaining. But it's pretty much everything that we've concluded throughout this whole content. What you're trying to do when you're understanding fundamentals is you're trying to look for that divergence. So what does that mean? If you're seeing AUD, you've got the data that shows that it's going up. For example, let's just say employment going up, interest rates are also about to go up. So what does that mean? That means there's a rate hike. So their version, so the RBA, the Royal Bank of Australia, they're going to be introducing rate hikes. So what does that mean? Interest rates go up, therefore investment into the country also goes up. Therefore, AUD is expected to go up. Now, what if you get other things as well, like their QE program? If that's, I'm not sure how much it is at the moment, but if they start to taper really soon, what can you expect? Less bond asset purchases, therefore decreased money supply, and also is seen as deflationary. So what that means is AUD is expected to go up because of reduced asset purchases. So you've got all that for AUD. Another point that you need to look at is the obviously imports and exports. The bond market is to do with asset purchases in a way. So you're already looking at that. Other types of fiscal policies as well. That's something to look at. Fiscal policies. So if you know what's going on with the taxes, for example, now this may be a move that might happen in the future. So it's not going to be happening at any point right now. However, this is obviously something that you always need to incorporate. I'm just thinking about other parts of our fundamental plan. Obviously, have a look back to all of our lessons so you explore every single aspect. But these are going to be the main ones. GDP as well. How could I forget? GDP is going to be one of the most important things. What that also leads to is, looking at inflation, for example. How much is inflation in that economy? So is the inflation increasing or decreasing? What we'd have to look at is things like CPI, the core CPI as well. So one thing that they call it is a PCE, if you remember. Got PPI as well. So that's for AED. If you understand, let's just say all the stats work out and the data is improving and everything like that, your analysis fundamentally shows that I expect AUD to increase over time because of these factors. Therefore, it's in deflationary conditions. So the economy is contracting. We're expecting the Australian dollar to increase in price. Now, let's take a look at another pair. Let's just say JPY, for example. We look at every single one of these pairs, every single one of these aspects. So just continue them over, have a look at every single one. Of course, when it comes to the data as well, use trade and economics. Because if you remember, they've got that comparative table. It's like this, it's got the GDP on there, it's got the CPI data, it's got inflation, it's got interest rates, everything. Actually have a look at the data, compare it side by side. So you'd look at, okay, which is higher, which is better, AED, blah, blah, blah. JPY, what's that? It's lower. There's going to be some bits that you actually have to infer what's going on. So of course you have to infer about the asset purchases. When is that going to be reducing? When is that going to be increasing or whatever it may be? Imports and exports, that's data driven. So you need to look at that, for example. Fiscal policies, that's also something that you may need to infer. Have a look at the general, one of the main things as well recently is COVID. This is one of the biggest drivers that we've been seeing in the markets recently. especially over the past year and a half. Who knows how much longer this will continue for, but for that, we're going to have to be looking at the vaccine program. That's been, I know, particularly in this year, especially for uh, the pound, that's what's been driving the pound up, especially because their vaccine program has been far superior compared to all the other programs around the world. And that's what's been causing that massive increase in price and strengthening compared to the other pairs. So what happens once you get all of this data and information? If we understand right here that JPY, for all the reasons listed, is going to be decreasing in price, therefore, what can we expect? I'm just going to delete all of this. AUD, JPY is going to appreciate. Now, let's actually think about other pairs as well. If you've got a list of pairs that you look at, so for me, it will be Euro USD, GBP USD, and GBP JPY. These are my main ones that I always look at. JPY, I can't spell. You've got to actually look at the fundamentals of every single one. But if I don't see a clear fundamental divergence, therefore I'm not understanding where price is going to be going long term, because either it might be fundamentals are very similar. So if the euro, so this is why the euro and the pound moves very similar, because their fundamentals might be either interlinked, their data doesn't diverge a lot as well. So all of the inflation stats that might be the same, their interest rate stats might be the same, their bond purchasing stats might be the same. These are the things you look at. If on a weekly time frame, on my weekly analysis, for example, I see these pairs, I don't understand where price is going. So obviously I analyze these because they're my favorite pairs. And obviously we've explored this in the technical section. But if I understand a certain currency pair has clear fundamental bias, so if I know that AED JPY is going to be appreciating in the next few weeks, of course, why would I not be entering on that? And that's exactly what fundamental divergences are going to be for. It's for picking your pairs, it's for understanding the long-term currency bias. So if we look at, have a look at my case studies on Instagram. In every single case study that I show, I believe it's at least a 1 to 50 trade. Now, I'm not actually looking, let's not talk about the risk to reward here because that doesn't matter. What I'm talking about is how I use fundamentals and link that to technicals. So I understood this for AED USD. I had 0.8 as an institutional figure that I was aiming for. I believe we had some equal highs or something on the higher time frame. Now, if I remember this trade correctly, we got here, for example, and then we got to some weekly order block right here. Now, that was a point of interest that I had figured out. At that point in early 2021, I understood that AUD at that point, their export market was doing very well in terms of their vaccination, not vaccinations at the time, but their COVID situation in Australia. It was far superior to USD in America, of course. Then what I did was when I got into my strategy, for example, saw some kind of retracement on the lower time frame, that's exactly why I entered. I understood my fundamental bias, so I was aiming for that. Of course, I took partials on the way there because you can never be too sure, price could retrace back down and then go back up. But because of that, because I had the perfect entry, because I understood the fundamental divergences between AED USD, AED was going up, USD was depreciating, so therefore AU goes up. This is exactly what you're going to be looking for, and that's what I want to be teaching you guys and drilling into literally into your head when you're looking at your pairs, when you're trading. Of course, this is what you want to be looking for. You're going to get high probability trades like this because you understand if my fundamentals are backing it, therefore price is unlikely to come back down and take my break-even point or take my stop loss, for example. And these are exactly the points that we're going to be looking at. So yeah, guys, that's it for this lesson. Truly take this on. Of course, there's not really something particular that we've looked at here, but it's kind of a summary of everything that we've learned throughout this course. So yeah, guys, take care and I'll see you in the next video.